Andy Schectman, founder of Miles Franklin Precious Metals Investment and a renowned analyst in the silver market, has just made a surprising shift in his prediction for silver prices. This video will give you all the details on this shocking twist that is shaking up the market and why it may be your last warning to take action. The silver market is highly volatile, but there is hope that there's always something new happening that can cause sudden price hikes or drops. And today's breaking news comes from none other than Andy Schectman himself. He has warned about an astonishing twist that could shake up the entire market. So let's get into it. Recently, the silver market witnessed a jaw-dropping incident that sent shockwaves throughout the industry. Within just 15 minutes, a staggering 25,890,000 ounces of silver were dumped onto the market. Let that sink in for a moment. That's equivalent to 5,178 COMEX contracts unleashed in a mere quarter of an hour. Such an overwhelming influx of silver raises serious questions about the motives behind it. The sheer scale of this silver dump reeks of desperation. Legitimate traders seeking to maximize their returns would never resort to such extreme measures. Dumping such an enormous volume of silver in a short period defies logic and undermines the credibility of those responsible. It's evident that there is more at play than meets the eye. So, what drives such actions? The answer lies in the realm of desperation. According to Andy Schectman, this recent volatility in the silver market is not an isolated incident. In fact, it is reminiscent of previous instances where big moves in the market were preceded by periods of heightened volatility. When we examine historical trends, we often observe significant price fluctuations before a major shift occurs. Therefore, it's essential to connect the dots and recognize that the current volatility may be a precursor to a substantial market move in the near future. One of the key observations in the silver market is the remarkable strength and demand witnessed in the price range of $23 to $24. Despite market fluctuations and manipulations, silver has consistently demonstrated resilience within this range. Andy Schectman highlights this strength as an indication of the solid support and interest from investors at these levels. The consistent demand within this range showcases the recognition of silver's intrinsic value and potential for growth of the future. However, as the price of silver surpasses $25 and moves higher, it encounters significant resistance. This resistance is likely a result of various factors, including profit-taking by short-term traders and presence of sellers looking to capitalize on the price increase. The observed withdrawals from the exchange, particularly with COMEX, hold significant implications for the current silver market scenario. These withdrawals indicate a growing demand for physical silver as market participants opt to take possession of the metal rather than holding it in exchange-traded contracts. This trend extends beyond COMEX to encompass other major players in the silver market, such as LBMA and ETFs. The increasing withdrawals and preference for physical holdings underscore a shifting sentiment towards silver's long-term value and the importance of securing tangible assets. The magnitude of the withdrawals and standing delivery contracts in the silver market should not be underestimated. These numbers reflect a significant shift in market sentiment and underline the growing disparity between paper, silver, and physical silver. The actions taken by sophisticated market participants, including major players, underscore their underlying belief in the scarcity of silver and the importance of acquiring physical holdings. The withdrawals and standing delivery contracts serve as a clear warning sign, indicating that the current price action fails to accurately reflect the true dynamics of supply and demand in the silver market. In the world of silver, price is not always what it seems. Andy Schectman sheds light on the idea that price can be used as a tool of misdirection by powerful entities. These entities exploit price volatility and counterintuitive price actions to divert attention and manipulate the market. By creating an atmosphere of uncertainty and confusion, they can discreetly pour physical supply into the market while the focus remains fixated on price fluctuations. The pouring of physical supply into the market is a crucial factor to consider when evaluating the true state of the silver market. Despite the misleading price movements, there is an influence of silver being withdrawn from exchanges and stockpiles across the globe. The significant deliveries of physical silver demonstrates a strong demand for the metal, contradicting the narrative created by price manipulation. Similar trends can be observed in the gold market, where physical deliveries have surged in recent times. Since the beginning of the year, over 240 tons of gold have been delivered back to the market, highlighting a significant appetite for physical ownership. This raises questions about the role of price as a subsidy to the dollar. It appears that the biggest money in the world employs the volatility in gold prices and counterintuitive price actions to their advantage, allowing them to accumulate physical gold while maintaining the illusion of stability. The future of silver supply is a pressing concern that should not be ignored. A report from the U.S. Geological Survey Society has shed light on the potential depletion of silver by 2036. This alarming revelation underscores the urgent need for proactive measures to ensure the availability of this critical metal. As the world's demand for silver continues to rise, it is essential to address the challenges surrounding its supply and take steps towards sustainable resource management. Mexico and Peru, two of the world's top silver-producing countries, are experiencing a decline in their silver assets. Mexico, historically a major silver producer, has been a substantial reduction in its silver reserves. This depletion is attributed to a combination of factors including increased production costs, stricter environmental regulations, and diminishing ore grades. Similarly, Peru, another significant player in the silver market, is facing challenges in maintaining its silver production levels, with reports indicating a 7% decrease in its production. Enjoying this video? Give it a thumbs up and share it with your loved ones. Don't forget to subscribe and hit the notification bell to stay updated with our latest content. Now let's jump right back in. One notable example of silver depletion can be seen in Mexico, a significant player in the global silver market. Mexico is experiencing a rapid decline in its silver reserves, with projections suggesting that a substantial portion of its silver assets may be depleted by 2030. These events highlight the vulnerability of the silver market and the importance of considering the long-term implications of such depletions. The declining supply of silver, coupled with the increasing demand, has led to substantial deliveries in the market. Investors and market participants are showing heightened interest in acquiring physical silver, resulting in a surge of standing delivery contracts and withdrawals from exchanges. The surge in demand and the strain it places on the available supply challenge the credibility of the manipulated silver price. It raises concerns that influential entities may be using price manipulation as a tool to advance their own agenda, diverting attention from the actual market dynamics. The manipulation of silver prices by influential players in the industry raises questions about their underlying motives. By controlling and manipulating the price, these entities can shape the narrative and exploit market conditions for their benefit. Taking a closer look at the bigger picture of government involvement in the silver market, recent revelations from an FBI interview with the director of Silver Eagle program at the U.S. Mint have raised eyebrows. During the interview, it was disclosed that there was immense pressure on the U.S. Mint to increase the production of silver eagles while simultaneously minimizing any potential backlash. It is essential to understand that government involvement in the silver market extends beyond traders controlling the paper price. The FBI interview with the director of the Silver Eagle program hints at a deeper level of involvement, with higher authorities exerting influence to meet specific production targets. This involvement suggests that the government has a vested interest in the silver market and its performance. Governments recognize that silver plays a vital role in numerous industrial sectors, including electronics, solar panels, and medical equipment. Furthermore, silver possesses unique properties that make it indispensable in military applications such as advanced weaponry and communication systems. By accumulating silver reserves, governments ensure their ability to meet future demands and maintain a competitive edge in the global economy. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.